Hi, I'm Jarrad Brown, Australian expat financial planner. Thank you for tuning into my video today. What I'd like to share in this video are some tips, some insights around superannuation for Australian expats looking to return to Australia in the next 12 months or so. What we're going to share is some tips around what to consider when it comes to super, what to consider with your overseas assets, how far in advance you should be planning, and what life, or at least financially, is going to look like once you're back in Australia. So let's dive right into some of my key insights when it comes to superannuation for returning Australian expats. Now, my first tip is to review any personal insurances that you hold within your superannuation fund. Typically within super, we're allowed to hold life insurance, total and permanent disability or TPD, and income protection or salary continuance as it's often called, which covers our income for a period of time in the event that we are disabled and not able to work, or at least partially not able to work. So if you do already hold these forms of cover, review them, make sure they're appropriate. Do you still want to continue funding them from your superannuation fund? Is it enough cover? Is it the cheapest form of cover? Or should you look at setting up cover in Singapore, for example, before you return, and that way you can avoid eroding your superannuation balance with those insurance premiums that are being paid each year. Because don't forget that the superannuation caps, and we'll get into this a little bit in this video, are not net of your insurance premiums, so they could be quickly eroding your superannuation balance, particularly as you do get older. So review the insurances you hold, review how you want to fund the cover, and make sure that the levels of cover are right for you. So that's my first tip. My second tip for you is to review any unused concessional contributions that you haven't utilised over the last few years while you've been living in Singapore or while you've been outside of Australia. Now, your concessional contributions are typically the contributions made by your employer, the superannuation guarantee scheme. So basically each year, if you're employed in Australia, your employer has to contribute a set percentage of your income into your superannuation fund. Now, the current limit is $27,500. That's Australian dollars, of course. That can be contributed into your super fund. But what you've also been able to do since the 2018-19 financial year is to accumulate those unused concessional contribution caps. Now, that's based on the cap of that particular year. So for example, let's just assume that we've got 3 years of unused caps. 1 year it was $25,000 and the following 2 were $27,500 each. So that gives us a total of $80,000 that we haven't contributed to our superannuation fund. Now, why is this important? Well, it's critically important because what that could mean is that we can make a large tax-deductible contribution to our super fund, either in the first financial year or even spreading it out over a number of financial years, to take advantage of that tax deduction and to boost our retirement savings. So this is a critical one to be mindful of. You do need to make sure that you meet the eligibility criteria. So speak to your advisor, speak to your tax agent, make sure you do, make sure that it's right for you. But if you do want to check out what your unused cap looks like, log into your MyGov account, make sure that the ATO portal is linked, and you'll see a little section there to actually see exactly how much of that unused cap you've got to utilise to play around with. So certainly an important one to check out. My third tip for you is to review your non-concessional contributions. So we've covered the concessional, meaning the tax-deductible contributions. The non-concessional is the after-tax money that you can put into your superannuation fund, and that limit is currently $110,000 a year. Now, this one is pretty important because when you're looking at what to do with your overseas assets, now that might be employer stock, that might be an RSP through your employer, some sort of share scheme, some sort of pension scheme. If you're PR in Singapore, it might be your CPF. It might be just shares and an ETF portfolio that you hold in Singapore or elsewhere. So when it comes to these assets, as soon as we set foot back in Australia, in most cases, these are all going to become taxable from the point of entry. So superannuation can be a great way in many circumstances to reduce the tax exposure on those assets and get them into something that is going to boost our future retirement needs in a tax-effective manner. Again, speak to your advisor, have a look at what's right for you, But do have a look at how much you can get into your superannuation fund, and don't simply assume that you can do it all the day before you retire, because unfortunately, the Australian Tax Office and the regulators in Australia don't allow you to simply tip all of your money into superannuation the day before. There are those annual limits that we've already touched on. So that's my third tip for you. The fourth tip is to review the potential for salary sacrifice contributions if you're planning to work in Australia again. Now, I mentioned that your employer under the SG scheme, the Superannuation Guarantee, is required to contribute a set percentage of your salary into your superannuation fund each year. Now, that is currently 10.5%. It is planned to get to 12%, but we'll wait and see there. What we do know is it currently sits at 10.5%. Now, if you're not at the 27,500 limit, or if you've got those unused concessional contributions, you may want to speak to your payroll team, speak to your HR, and advise them that you wish to contribute an additional amount of money every week, every month, whatever frequency you get paid on, into your superannuation fund. Depending on your level of income, which obviously dictates your personal income tax rate, this might be a very effective way to reduce your tax exposure, your tax liability in Australia, and also boost your retirement savings. There are plenty of calculators that's quite quick and simple to work out whether you should, whether you shouldn't. But again, speak to your advisor, speak to your tax agent, and have a look at what's right for you. So that's the fourth tip when it comes to superannuation and repatriating to Australia. Now, my fifth and final tip for you when it comes to superannuation and returning to Australia, we've already covered this a little bit with the non-concessional contributions, but it is to make sure that you have a very clear understanding and awareness of how your overseas assets are going to be taxed once you're back in Australia. Australia, similarly to the US, often taxes worldwide assets, worldwide income, so you do need to be very mindful that if you're holding shares, if you're going to have a bonus payment that you receive for your work in Singapore, but after you return to Australia, have a look at what the tax treatment is going to be. Make sure you've set money aside if you don't have any ways to escape or to remove or at least reduce that tax exposure, and make sure that your assets are structured sensibly. When it comes to overseas pensions, so in Singapore, that's things like CPF for permanent residents and Singaporean citizens, often the Australian Tax Office will give you 6 months from your return to Australia to get that money into your superannuation fund before it starts to become taxable. Now, 6 months can fly by very quickly. We're moving back into Australia, we're setting up again, we're updating our address, we're getting the kids in school. That 6 months is going to disappear very quickly. So plan ahead, make sure you've got a clear action plan when it comes to your overseas assets, and make sure that you're not going to be hit with unexpected tax bills that could have been avoided or at least reduced with a bit of prior planning. I hope that shed some light on superannuation for returning Australians. If you have any questions about your super, around what to do, drop me a note in the comments or reach out to me directly. Thank you very much for tuning in. Don't forget to subscribe and like our video, and I look forward to seeing you next time.